Hey everyone, this is Dan with my analysis on Netflix, stock symbol NFLX. Netflix has gone through some explosive growth in the last 3 to 4 years. The stock price has gone up a lot. I've been buying and selling Netflix shares in the last 3 months and have made a lot of profit. In the next few minutes, I will tell you why I bought more Netflix shares yesterday and why I believe Netflix will continue to grow impressively. This is the daily chart for Netflix for the last year. As you can see, it has gone up about 88% compared to SPY, representing the movement of S&P 500, which went up only 11%. QQQ, representing the price movement of NASDAQ 100, also went up just 11%. Netflix clearly outperformed the broad market in the last 12 months. If you look at the chart for the last 3 months, we can see that Netflix went up about 48% when QQQ went up 32% and SPY went up 24%. Again, Netflix outperformed the broad market in the last 3 months. If you like what you have seen so far, I encourage you to click the like, subscribe, and notification button so that you'll be notified when I publish updates on Netflix or when I publish another video. Thank you. Let's continue. We have a lot of interesting stuff to cover. What does the company do? You probably know already. Netflix, they provide entertainment services. They offer television series, documentaries, and feature films and movies. They purchase these contents from other movie producers, but they also recently started to make their own movies and TV series. Actually, they've won quite a few prestigious awards in the last 2-3 years. Let's look at some of the key financial data. The market cap is $542 billion, definitely a very sizable company. Netflix is actually one of the 5 companies called the Fantastic Five. You probably heard about it, or the Fab Five. I will talk more about them later. The PE ratio is at 60, pretty high, and the PEG ratio is 2.51, definitely high. Usually we prefer PEG ratio no more than 1, but I will explain a little bit more about that. Actually, the PEG ratio, if you look at it closer, it's actually closer to 1. Based on FinViz, the PE is 62, and the PEG ratio is 2.51. And they use the EPS growth of 25% to calculate the PEG ratio, which is the PE ratio divided by EPS growth, and also divided by 100, and that's how they arrive at the 2.51 figure based on 62.52 and 25%. But if you look at the EPS year by year for Netflix, and look at the EPS growth every year, especially last year it was 65%, then you can see that the average EPS growth for the last 3 years was 25%. And that's where FinViz got the 25%. Now, if you look at the chart of the EPS in the last 20 years from 05 to 2024, the 25% EPS growth will correspond to a straight line like this. As you can see, with a straight line like this, it doesn't really describe the much faster growth in the last couple of years. The last year's EPS growth is 65%, which looks like this. And if you look at the PEG ratio based on the 65% EPS growth, then the PEG ratio will be 0.96, which is less than 1, and that's a very favorable PEG ratio. Later on, I will talk about information supporting the argument that Netflix can actually grow at 65% rate, or maybe at least 40 to 50% EPS rate of growth for the next, I would say, 2 to 3 years easily. And by the way, they will announce their second quarter earnings on July 18th after market close, and we'll know more about the progress that Netflix has been making recently. Let's look at analyst ratings. This is based on Yahoo Finance. Out of the 48 professional analysts tracked by Yahoo, about 2/3 of them recommend a strong buy or buy for Netflix, which is very positive, and the rest of them recommended hold. Only maybe just one person recommended sell. That means it's very bullish overall for Netflix. The average price target is $11.75 and the current price is $12.75. The max is $1,600, which is quite a bit above the current price. And if you look at the recent changes in analyst ratings, there's a lot of reiterated since May of this year, especially from Bank of America, which rated them as a buy at the target price of $14.90, which is above the $12.75 current price. And Oppenheimer also outperform rating, which is a very bullish rating, and the price target of $14.25 also above the current price. But on June 7th, which is a couple of days ago, Seaport Research Partners downgraded Netflix from buy to neutral. And that's a bit of a bearish sign. Now, as long as this downgrade is not followed by other analysts, then we should be safe. So we definitely need to monitor the ratings very diligently in the next few days to see if they get another hit or more hits by analysts. The rating from Louis Navellier is overall a grade A rating, which is very positive by Louis Navellier. And the fundamental grade is B. It's based on net income, EPS growth, debt and asset ratio, and so on and so forth, all the fundamental data. Quantitative grade, which is based on the chart movement, is an A. That means the chart looks very bullish. And we saw the charts for the entire year and also for the last 3 months. Those charts look very bullish for Netflix. They have embarked upon quite a few important strategic initiatives. First of all, they expect to spend about $18 billion on content in 2025, up from $17 billion last year, and that's a big budget compared to even some of the major movie studios like Disney and Universal and so on. Netflix has developed itself into one of the top movie and TV production studios in the world. And they started to air commercials in 2024, and that segment of their business has been growing rapidly. The projection for ad sales will be $5 billion for 2025, and they project ad sales will reach $8 billion for 2027. So the ad revenue will become a very important chunk of their revenue in the future. Netflix's early move into interactive show and live programming is also very strong. There's this worldwide wrestling live streaming. The first month on the service reached the global top 10, which is definitely a very impressive performance. So they will have a lot more growth in the live streaming business. Management also mentioned that they will experiment in cloud gaming and real-time tournaments. So that's another source of revenue. Netflix overall is just a very, very innovative company. More strategic initiatives, especially related to artificial intelligence. For example, they identify what each user likes to view and make recommendations accordingly. That's why Netflix is very addictive, which is great business for Netflix. Netflix decides what content to create based on viewership by region, by market. And they've been producing movies and TVs not just in the US, but also in different parts of the world like Spain, Germany, England, France, and Taiwan, Japan, and so on and so forth. And Korea, they make a lot of TV series in Korea, very good quality TV series. They have automated subtitles, dubbing, and translations for their international contents, and I've been watching a lot of movies and TVs Netflix bought made from overseas, and the quality of the dubbing overall is very good. I'm very impressed. They've been running through A/B tests using AI to determine which thumbnails, trailers, or tagline to use for each specific viewer. They enhance the search bar with natural language processing, so you can say, show me funny sci-fi movies with robots. It'll then recommend a bunch of movies for you under that description. Netflix also uses AI to predict when the users might churn or disengage Netflix and stop the subscription, so they proactively recommend content or send notifications to keep the viewers engaged. So these are the AI initiatives. With all these important strategic initiatives, I believe there's a good probability that Netflix will continue to grow impressively at 40 to 60% EPS growth rate in the next 2-3 years. In other words, see this impressive growth in the last 2-3 years, I think that's most likely going to be sustained. Let's look at insider trading activities. Each red bar is an insider sale of the Netflix stock. As you can see, there's quite a bunch of sales recently in the last month or so. If you look at the stock price when we had a bunch of sales here and then the market dropped, and coincidentally in 2022 that's when the Fed started to hike interest rates. And then there's a bunch of sales here, so we had a little drop here, and with this recent sales, quite a bit of sales, we see the stock price also flattening. So that's a little bit alarming, a little bit of a bearish sign. And if you look at specifically who's been selling, who the insiders are selling stocks, very noticeable is the Chief Financial Officer, Mr. Spencer Newman, who sold 2,601 shares worth $3.4 million, which is about a quarter of his total holding before he sold. That's definitely alarming. And I looked up this person a little bit. He's been the CFO of Netflix since January of 2019. He's still the CFO, and he's not quitting anytime soon as far as I know. So that's a bit of a positive sign, but he did cash out to the tune of $3.4 million. So maybe he bought a yacht or something. Good for him. But it's alarming definitely for the investors. We should keep an eye on any future insider selling activities. Let's look at how much the company is worth. For comparison purposes, I'm listing the PE ratio and the PEG ratio for the Fantastic Five, and they are Amazon, Microsoft, Google, Netflix, and Apple. As you can see, the PE ratio, Netflix at 60 is on the high side, definitely the highest PE ratio among the 5 companies. The overall average is 37. The PEG ratio, Netflix currently has 2.51, which is not the highest one. Actually, the highest one is Apple at 4.27. The group average is 2.6. If you look at a current PE ratio of 60.26 and the EPS growth of 65%, actually that's the EPS growth of last year. So if you use that EPS growth number, you arrive at a PEG ratio of 0.93, which is not bad. So for the next 2 or 3 years, I assume a PE ratio of 50, which is less than the current ratio of 60. So I'm a little bit more conservative, and I assume the EPS growth of just 45%, which is less aggressive than last year's 65%. And I believe the 45% EPS growth is achievable considering the strategic initiatives they've been working on. And with those two numbers, we are looking at a PEG ratio of just 1.1, which is not excessively high. And then based on these assumptions and the current net income and the number of shares and stock price, we can calculate the theoretical net income for 2025 at $12.6 billion and the stock price as 1,445 at the end of 2025. For 2026, 2095, and so on and so forth. In other words, within about a year from now, at a price of $14.45, we can look at the price with a gain of more than 10% from today's price. So that makes Netflix a good investment choice from that perspective. Let's see whether Netflix is resistant to stock market crashes. I'm very concerned about potential stock market crashes. I used 5 periods of time to do the analysis. First, the financial crisis that happened at the end of 2007, 2015 market crash, the Fed rate hikes in 2022, 2023 market correction that happened in the last quarter of 2023, and then the famous pandemic crash. You can see SPY, for example, during the financial crisis went down 52%, whereas QQQ went down 47%, pretty significant. However, Netflix went up 71% during the financial crisis. It's pretty impressive. And then during the pandemic crash, SPY went down 23%, QQQ went down 17%, and Netflix went down only 4%. So basically, overall, if you average the numbers from these 5 crashes, I get an average market drop effect. SPY is negative 23%, QQQ negative 21%, Netflix is positive 10%. That definitely Netflix has been more crash resistant than SPY or QQQ. And if you look at the stock performance since 2023, Netflix is up 332%, QQQ 105%, and SPY 63%. Definitely after Netflix also outperformed the broad market overall since 2023. Let's look at the chart in more detail. This is a 3-month chart, and you can see there was a rather noticeable drop 4 days ago, and since then the stock price has been pretty flat, and the stock price is approaching this blue line, which is the middle of the Bollinger Band or the 20-day moving average. If you look back the last couple of months, whenever the stock price started to approach this line, the 20-day moving average, it started to rebound. That's why I believe it's very likely that within the next 2-3 days the stock price will start to rebound. And if you look at the RSI indicator, that's a relative strength indicator. It's at 56. That means it's not excessively high. That means the stock is not overboard, and that's a good background condition for a possible rebound in the next 2-3 days. Not surprisingly, DMI, MACD, and MACD are showing declines for the stock price. I'm again anticipating a rebound pretty soon based on the strong fundamentals and based on the technical chart. Let's sum it up. Netflix has demonstrated a history of fast-growing EPS, and their sales expansion plan and AI strategies seem to be robust enough to support high EPS growth rate. The evaluation calculations and better investing SSG chart show upward potential for stock price. It is more resistant to market crashes than SPY or QQQ. The price chart shows recent dip in stock price, but there's a high probability of a rebound at a 20-day moving average in the next 2-3 days. The professional analysts mostly recommend buy or strong buy. The July 7th downgrade to neutral by Seaport Research Partner is worthy of attention, but will not be too damaging if it's not followed by other analysts. Insider selling activities seem to be high in the last couple of months, especially the selling of shares by the CFO is alarming. We need to continue to monitor insider selling activities. So what are my strategies? First of all, I bought and sold Netflix shares in the last few months and made some profit. And I'll show you exactly what I did in a minute. Most recently, I bought some more shares on July 8th. And I'll buy more shares if the price rebounds around the middle of the Bollinger Band, like what we've seen in the chart a moment ago. I might sell some shares if the stock price stays below the middle of the Bollinger Band in the next few days. I will notify my subscribers about my analysis and my trades of Netflix in the next few months by way of my YouTube account in the community section or the posting section. For example, 3 months ago, I posted that I added more stocks to my analysis as shown in my March 29th video, What You Buy When Market Crashes. I analyzed 38 stocks or ETF, and I found that the most crash-resistant ETF for stocks are Nvidia, Netflix, Tesla, Eli Lilly, etc. Actually, the ranking is not just based on crash resistance, but also performance since 2023. Apparently, Nvidia ranked as a top selection because it went up tremendously. But as far as crash resistance, actually Netflix is even better than Nvidia. And subsequently, I bought Netflix shares. 10 days ago, I posted that I sold on Friday, June 27th, during aftermarket, the QQQ shares I bought earlier, and specifically I sold the Netflix shares I bought on May 23rd at 11% gain. And then 2 days ago, I tweeted that I bought more Netflix. I'm still holding shares bought on March 31st and May 16th. For those shares, I'm seeing a paper gain of more than 24%. If you like what you've seen so far, I'd like to encourage you again, click the like, subscribe, and notification button. As usual, I welcome your comment, questions, and suggestions. I'd like to remind you that I'm not a financial advisor. I share my stock trading strategies and analyses for educational and entertainment purposes only. If you want to buy or sell stocks, you should make your own decisions, and you should definitely consult with your financial advisors before you do so. This wraps up my video for now. I will chat with you again in the next few days. In the meanwhile, I'd like to wish you the very best of luck with your financial investments.